her first speech since taking the role in April, Reserve Bank Deputy Governor Michele Bullock spoke at the Economic Society of Australia today in a talk entitled "How Are Households Placed for Interest Rate Increases?" Well, she says most Australians are well placed to manage rising interest rates, with the most vulnerable being those in a lot of debt and recent home buyers. She said the economy has turned out to be very resilient. Once pandemic-related restrictions were removed, the economy rebounded strongly. Consumption of services has grown and demand for goods has held up. The labour market is tight, with the unemployment rate at multi-decade lows and vacancies at historical highs. As in many other countries, inflation in Australia has risen and it's now higher than it has been since the early 1990s. Global factors such as COVID-19 related supply disruptions and also Russia's invasion of the Ukraine account for much of this increase. But domestic price pressures have also been building. Together, this has contributed to the highest rate of core inflation for many years. Over recent months, therefore, the Reserve Bank Board has been withdrawing the extraordinary monetary policy stimulus that was put in place to help support the Australian economy against the effects of the pandemic. Now, the cash rate target has been increased by 125 basis points since May to 1.35%, and the board expects further increases in the cash rate will be needed in the months ahead. Just how and how fast the cash rate is raised will depend on many factors. But in making this assessment, one of the areas the board will closely be observing is how households respond to the combination of rising interest rates and prices. Now, we will bring you all the latest from the Reserve Bank here at Kalkine TV. I'm Rachel, signing off for now.